Hi, everyone. Welcome to Analyze Your Trade, episode number 47 for August 28th, 2018. We are broadcasting live on YouTube at 4:30 p.m. Eastern Time. And also, if you listen to podcasts, I am now posting the audio-only version of all episodes as podcasts. Stitcher. Today we'll be discussing your trade ideas, and over the last few days, 30 people submitted up to 5 symbols each, and I have put the list together of top quests. You should be seeing the screen now. I'm talking. My name is David Osmeter. I'm the creator of TimingResearch.com, and I developed this show with Dean Jenkins of Follow Me Trades, but he is off this week as moderator. Michael Filighera was supposed to be here to moderate, but he's having some technical issues, so he might join us here in a couple minutes, hopefully. And until then, I'm going to go ahead and turn it over to Jim Kenney.
Okay, good afternoon, everybody. I'm Jim Kenney, and we're going to be having our show here today. Michael hopefully will be able to be joined in. I'm here with Christian today, and we're going to go over about 15 different stocks, just like David said. With regards to myself, I'll just introduce myself, and then Christian will introduce himself. I'm the content provider at Option Professor, and that's a company that has educational DVDs on different uses and risks of the option trading. Uses such as cash flow or income purposes and hedging purposes, as well as limited risk trading purposes. And so there is quite a bit to learn, a lot of strategies to understand, and that's what Option Professor is all about. I'm going to do the best I can as far as giving you my opinion here today on the stocks that are listed and some input on some of the stuff I see technically. And I'm sure Christian is going to do the same. I'm going to switch it over to Christian so he can introduce himself right now.
Cool. Thanks very much for the intro. And David, very nice being on the panel again. Sure. My background very quickly is I started my career at Merrill Lynch, Bank of America, Merrill Lynch. I was a risk or a block trader over there in ETFs and other Delta One products. And I now run the Tribeca Trade Group. And we have an online trading room. We do a lot of swing trading. We do a lot of day trading as well. I'm mainly a swing trader. And, basically focus on a lot of momentum stocks. Whatever's moving, that's what I'm looking to trade. Doesn't have to be always to the upside, can be to the downside. But obviously, we've been in a nice uptrend and things have been really working to the from the long. And so that's basically what we do on a day-to-day basis. So looking forward to going over some charts with you and discussing some opportunities. So again, thanks for having me on and thanks for glad to be aboard.
Okay, thanks a lot, Christian. And you're going to be posting the charts on each one on the screen there, are you not?
Yeah, and I should be sharing. I should be sharing.
Yeah, no, I think you are. So
okay,
I'm not going to be putting anything up. I'm just going to be working off of what you're going on. And if you'd like, you could go first if you'd like, and then I'll come in after you speak about each stock and give a little bit of additional input.
Awesome, sounds great. Well, first one I see on the list is Micron. This is an interesting one. So first of all, on my charts, they may seem a little bit crazy to you, but I'll go over and I'll just walk you through real quickly what I have on my charts, and then that might seem a little bit simpler. But first things first is I've got some moving averages on here. The white line that I've got is the 200-day moving average. So I think that is important to look at the overall trend. And then I've got some shorter dated trends or shorter dated moving averages on here, including the 50-day moving average, the 20, the 5 as well. I also look at value areas, which really gives me a sense of good support and resistance. Value at price, I think, is important. So that being said, I'll dig into the Micron chart here. And what I see in Micron, and full disclosure, I actually just started along in Micron a couple days ago. I like the move back above the 200-day moving average. And, it's been kind of a rough stock the last couple of months, as are some of the semiconductors, right? So I think this one is perking up a little bit. I think it's pretty washed out. I think for a while it got pretty, there was a lot of, I would say, speculative money that went into Micron. There was a lot of option activity, and people were really playing that to the upside. And I think since we hit a high back here in May, I think things have been pretty washed out. And I like easy trades. So right now we're just above the 200-day moving average. I know exactly where to get out of this, which would be back if the price backs below the 200-day moving average. So for now, I'm long versus the 200, and I'm looking for this. You know, in a perfect world, I would like the price to get back above the purple line there, the 50-day moving average. But you know, I think an entry versus the 200 is fine right now.
Okay, great.
And guys, I think Michael's back. You there, Michael?
I am here.
Okay, great. If you want to tell us,
Thank you so much for stepping in.
Sure, absolutely.
I really appreciate it. Jim, did you have a chance to discuss Micron, or
no, I was just gonna give you my input real quick, and then maybe you could jump in, and then we'll just you know, go from there. On Micron, again, this is in a sector that a lot of people, even on CNBC with this Dan Nathan, was kind of bad mouthing this sector, and I've noticed that it's turned around quite a bit. And so the sector has turned around quite a bit. And of course, Micron's in the semiconductor, so it has turned around quite a bit. Looking at the last 10 days, it was as low as 46, jumped up there in towards 49. There's a little bit of a gap between 48 and 49. And then it went a little bit sideways for a couple days or so, and then bam, up to the upside again. So a little gap right under 51. I don't know if it'll come down and hit that. If it breaks 51.5, it probably will. But the momentum has turned up a little bit. And as far as the 52-week high up at almost 65, there's certainly some real estate between 52 and 65, the 52-week high, which you know, could obviously close that gap if the news keeps turning as it is right now. Looking at the numbers that I like to look at, which is the moving averages and the short interest. Short interest is only about 4% of the stock, so that's not too much. The moving averages are 53 on the 50-day and 50 on the 200-day. So Christian was saying that 50 number is not a bad one to hang your hat on in the short run. And I think that makes some sense because you wouldn't want it falling apart up here either. And the volume's a little light on a 50-day basis, 36 million shares a day, and on a 200-day basis, 46 million shares a day. So the volume has not been ripping the cover off the ball, but the momentum has turned up, and as long as it doesn't break underneath 50, it certainly looks constructive right now. And that's all she wrote. Yeah.
And that is all she wrote. You guys are, this must be one of both of your favorite stocks, because I'm very engrossed in what you both had to say. I agree with what Christian added, and that's, Christian, I trust that that's a daily chart that you have.
That's correct.
Okay. On that daily chart, as soon as that price is crossed over the 200, I agree with what Christian said, and that is you move in. You take a position based on that move itself, and then that same moving average becomes your stop. Now, what I would add to that is I use a much shorter term. You use a 50. I use a 9-day to just kind of, when I'm looking at things on a much shorter time frame. But it also works on the daily. And I would say if what we can do now is hope that 9-day, which is curling higher, which is a good sign, continues, and then it goes and crosses the 200-day, and then it's, I think from that point it would be off to the races. Off of the May highs, just below 65, as best I can see, the market is this is the beginning of a new rally, and that would portend that we will, or prices will eventually move to new highs. Now, what could be working against this? The fact that the general market, just the market in and of itself, is reaching some pretty strong overbought numbers, and it's just really stretching and stretching and stretching. And I don't think that they really have a floor underneath that that they can rest why they're pouring back into the markets as they are right now. That could work against something like Micron, which maybe does have some particular good reasons for continuing to move higher. Now, I think on a very near-term basis, stock does look like it could pull back a little bit, but I would think maybe it has a shot of getting up closer to 54 before it actually does. And then I would just be looking for a very, not a large pullback, but just a small pullback, which gives opportunities for adding to positions or just, base building. Again, keeping your stop in place. And again, that for me would also be the 200-day moving average. Or I think, Christian, you said 50, around that 50 area, which I like. And that's about it. That's what I see in Micron. I think the stock's got a lot of upside potential here. If indeed this is the beginning of a new 5-wave pattern up. So, anybody else have something that they want to add on this before we go to the next?
Nope.
Good. Okay, so next up, I'm going to switch over to a different screen. Next up, we have an all-time favorite, AT&T, or as they used to say, Ma Bell, but not anymore. And I'm going to turn it over to you, Christian. You're up first on this one. And
cool.
Good to you.
Yeah, so it's funny, AT&T, when I think when I was on the panel a couple of weeks ago, I think we also went over an AT&T chart, and kind of the same stance. Although I do need to go to an AT&T store because I need to get a new iPhone. I think mine is almost kaput level, so I have to upgrade myself. And I am an AT&T customer, but I do not own any AT&T stock, and I just think that this is a choppy one. It's below the 200-day moving average. It seems like it's been honoring that 200-day moving average pretty well. Looks like we got up to here, failed, got a little bit above it here, went right back below, same here, failed here. Didn't even make it here, and it looks like we're just continuing to wither away a little bit. So for me, I don't want to completely ignore it. I think I'm more, I'm really don't have too many positions right now in defensive stocks, which I would put AT&T in that bucket. But I would really wait until this thing gets above, it gives you a little bit of confirmation and gets back above the 200-day moving average. If you want to play a counter, if you really must, you could play a counter trend trade up to the 200. But for me, it's a complete avoid, and we'll see if it actually comes back to life, maybe above $35.
Okay. Jim.
Yeah, I think there's some encouraging signs here, but it's definitely a jury's still out kind of deal. And the reason is I'm looking at the sector through the Vanguard ETF on telecommunications, and that's right on the ledge as well. So I think the way you play this would be you go with momentum if you get it. And that means close above 35 would be a very good sign. And of course, if that had the ETF breaking out as well above its moving averages, because they're right around, everything's trading right around their moving averages right now in this telecom. Now, here's the good news that might be telling us it is going to break out to the upside. The 50-day moving average on volume is 40 million shares a day, and the 200-day is 34 million. So obviously, lately, more recently, on a moving average basis, the volume's been increasing. And it looks like the stock has improved a little bit as well. So again, I think if you can clear the hurdles, get through the resistance, then this could have a pretty big future. The great news here is you love to watch a movie where you get 6% to watch the movie. So this thing pays a healthy dividend. And so while you're watching paint dry right now, you're getting paid 6%, which is 3 times money market or 3 times a T-bill. So that's not a bad dividend. So again, without the momentum breaking out, though, you're just sitting on the unknown.
Right. And I'm going to concur on the dividend play. I think there are a lot of investors, and that is how they invest in, and they want that type of a protection so that they can sit out and ride out the bumps and the grinds that usually take place within the markets. So, and it is one of the higher yields. So I think that that's a good call on your part to kind of point that out. I think just on a chart basis that AT&T, I don't think it's going to get above 35 anytime soon. In fact, I think that, that was my weekly. I'm on the daily chart I was looking, and it did not look too healthy to me. And I think part of the reason might be that AT&T being a part of all the major indexes, that they fall prey to those indexes. But near-term basis, I think that we continue to move lower. We should drop below the recent low from last week at 32.39. I don't think it's going to go too much further. Hold on one second. That's 33.57, 30, 39. Yeah, maybe another buck. So yeah, I think 32 should contain it. If it doesn't, then something else is at play. And I would say that the rally off of the lows that we saw at the end of July is done, and that AT&T would likely take a revisit to the 30 level before it continued higher. What could cause that? There's a myriad of reasons, but I'm not really sure that I can attach any to AT&T right now. It is a very, very widely held stock. Will continue to be that way. And once again, I think that if you're investing for return, then you are going to like AT&T because of the dividend. Next up, we have JD, which
IBM.
Oh, you're right. Sorry. Thanks, Jim. IBM. Big blue. Big old blue. Christian.
Yes, and yeah, I could have skipped right over IBM. That would have been cool with me. I see what you did there. You just skipped right over because you know, IBM. I think is really it's chop. I mean, the chart that I have in front of us. I'm not even going to super analyze this one. I'm going to, I'll pass on this one. I just don't really think there's a big trade here. I think if you want to set an alert, you know, what's really helpful about a lot of trading systems that we have that we didn't used to have years ago is you don't have to constantly go back and watch charts. You know, set an alert at 151, you know, if it's a name that's on your radar, and then you don't have to watch the day-to-day movements. And I really would not get into this name unless it really had some momentum and broke through 151. But I think there's so many better names out there in the technology space to play. I think IBM is going to be a work in progress for a while. So I'll keep it short and let you guys tackle it.
I'm not going to let you off the hook that easy. No, I'm sorry. I didn't mean it quite that way. Hold on one second. I hear what you're saying about IBM, and I hear what you're saying in terms of there are a lot of other players within this space. But do you find that those other players are overbought, are overvalued? And I'm talking particularly because IBM's attracting a lot of attention because all the work they're doing in the cloud right now. And if we had to put that against others that are also in the cloud, that are big in the cloud, how do you want to weigh that out? Or if you weigh it out?
Yeah, I mean, that's a good question. I mean, I do trade a lot of the cloud companies. I trade a lot of the smaller cap ones. And, you know, I also, you know, most of the time I do look at technicals, but I also, you know, probably about a quarter of what I do is fundamentals. And I really like, you know, some of the names that have been recently reporting earnings, the Autodesk, which is more of an infrastructure software play, Vive, which just reported, Splunk just reported. You know, these names they're churning out higher revenues quarter over quarter. I was really impressed with reading into some of those earnings reports and seeing that not only did they beat this quarter on the revenues and on the EPS, but they're also they're upping their guidance. So, you know, it does look like the business, you know, the American business is very strong right now, but it just doesn't seem to me that IBM is executing very well. So it does feel like they're playing catch up. And some of these smaller companies just seem to be kind of eating their lunch. I would rather, you know, and I know Salesforce reports, which you bring up an excellent point. It is overbought. I don't think I'll be playing Salesforce for earnings because it's just blown out a little bit too much. But I think if it's a good report and it sells off on it, I would rather go back into Salesforce on weakness than buy IBM here.
Very nice. Thank you very much. And Jim.
Yeah, this just looks like the twin brother of telephone. Technically, you know, they're both meandering behind underneath a number. Telephone at 135, this thing at 150. They both pay a healthy dividend, so people that are watching paint dry are getting paid to do it. But if you're looking for a big growth and a big momentum-y type thing, you got to look elsewhere.
I agree, but I'm going to toss a question out there now. The people that possibly do invest in IBM because of that dividend, because they have a good ROI. They're not watching the market every day, so they may like the fact that IBM is just kind of sitting in this sideways channel because it's okay. It's not increasing. It's not really going down, but I'm continuing to receive my 6% of my dividend. And so they'll sit it out, and eventually something will happen. It'll catch fire and go up, or it won't, and then they can get out. But does this fit more? And you guys do more of this type of advice, I think. Correct me if I'm wrong. On when you have people come to you and say, "Well, I'm more conservative. I don't really want something this high flying." For example, like Salesforce, or the other one that you mentioned, Christian, it's just Autodesk. Both of which, Autodesk and Salesforce, both of our San Francisco companies, as is Splunk. And I've actually talked to a lot of people from Splunk, and those are the younger people that are coming in, and their ideas are the ones that are taking hold, and it's very encouraging. Now, put that versus IBM. IBM's going to be steady. They're going to chug along steady. They may drift down to 91, but they may rise back up to 200. That all fits into their game plan. But then you put that up against a company like Splunk, or even Autodesk is more grounded, I think. But even if you want to do it against Salesforce can get very volatile, simply because you get a lot of play going in there. We have a lot of people that come pumping in because of earnings or because of something that is going on with the company. And I think with IBM, we see most of the activity once they report. Suddenly here comes a big change of hands. Everybody's fine. Then we have to wait for the next quarter. As far as the stock itself, I don't hate it. I don't love it. And so I'm going to be just like the way it's trading. I'm just going to sit in that channel. I agree with both of you, what both of you have said. And the 151 number that you use, Christian, I'm assuming that that's based on the fact that if it goes to 151, it will have broken above the 200-day moving average, which it would, yeah. And then again, that would turn the picture more near-term positive. Right now, though, it's channeling, and it's not getting very far. And it's sitting basically in an $8 window here. And that's not doing anybody any favors. If you happen to like to trade IBM and you are long the stock, there's a lot of option trades that you can do to put around that, as long as it's going to sit inside this channel, like $8 channel that it has since mid-July. I'm one that I think of right off the top of my head is an iron condor. So there are a lot of different things that you can do that'll continue to earn you money while you're waiting for the stock to make its move. And now we get to move on to JD. So now I can put that in. And that's JD.com. And for those that don't know, JD.com is a Chinese company, and it is an e-commerce site and quite popular. And over there in China, they're based in Beijing. And Christian, I'm going to start with you again.
Cool. So JD, I have lost my patience with JD. I've tried trading JD a couple times in the last, I don't know, 2-3 years, and have had a little bit of success up here, but man, it's been such a tough trade. Since this thing kind of slipped and went below the 200-day moving average, you can see I've got a dotted line here because was thinking, okay, well maybe if it goes below this, it's one of those cases. If it goes below this line, okay, maybe it's going to hold this line, and it just seems to continue to break down here. So I have not been doing a ton of shorting, but this one looks like it would have been in hindsight a pretty decent short. Yeah. The earnings that it came out with a couple weeks ago, lackluster. I was thinking maybe this thing has gotten washed out enough that the earnings might provide a bounce, but that bounce was very short-lived. So I think for now, and again, maybe the point of me getting tired of this name and kind of washed out, maybe it'll do something now. But I think for me, I'm on the sidelines with this name. It's been just too frustrating of a name. for me.
How much dollar exposure does this have, dollar versus yuan, or you know, in that the fact that I don't think it trades in dollars in Beijing. So
sure, it's you know, it's got that exposure, right? It's a great point.
Yeah, and I think that that does come into play here as well. Jim.
Yeah, I just was looking at something. To me, it's getting a little bit on the oversold side. If the 200-day average, I think, is around 40, and we're at 32, we're 20% under the 200-day. And there's some high points from late, let me just see here. Yeah, from late 2016 or in early 2017, somewhere between like 27 and 28. So I would say that if it's stalled out between 27 and 30, that might be a place where it could bounce out of. Particularly if they were to get maybe some kind of a deal with China a little bit more worked out and get that Shanghai turning around a little bit, because obviously it's been a doghouse there. Right. So this might be one where if you wanted to bet that the China thing could warm up a little bit, this might be a beneficiary of that, turning their economy around a little bit, turning the optimism around. Anybody who's short, getting them to get the heck out of there. But like I said, that's the best thing you can say about it, because it is pointing straight down. But like I said, you get 20, 30, 40% underneath or above your 200-day. I'm definitely looking for the contrary trade at that point.
And I'm glad you brought that up, because I was sitting looking at the same charts that we're all looking at, and I was thinking, gee, this really looks like it's going to go to 28 to 30. And then you mentioned that exact same number. I'm not sure how you derive that, but I kind of just thought on basis of the pattern that I see in play right now, it looks like it needs to make one additional low, and that would be below 31. 3106, I think, is the current low right now. Hold on, let me just double check that. 3107, yeah, 3107, 3106, and I think it needs to go closer to 30. Now, if it dips under that, that's just, I think, a bonus. And then I'm going to be very much in line with what you added, Jim, and that, you know, you got to take the contrarian position and you got to start to, you know, come back into the stock. And again, what could be aiding that at that time? I mean, if any of this trade war talk gets really escalated a little bit more, I think that could drive the price down, just simply because people are going to walk away from Chinese stocks because of the exposure is just too heavy, whether or not the company does well or not. So, and I think you could probably get that going all the way down to there, depending on if the rhetoric stays high. If the rhetoric settles down and that whole trade war goes off to the sidelines and doesn't really get the impact that it is intended, then I think the stock has a very good chance of making a strong comeback. And as we've been talking about, the 200-day moving average will continue to be in play. But right now, versus the weekly, the 200-day moving average is pointing straight down. It's not curling. It's not moving sideways. It's pointing straight down. And whereas on the daily chart, it's just been more kind of doing that. The weekly's doing that. And I don't think that that shows us, it's not a good sign. Let me just put it that way. I don't think that's a good sign at all. Next up, we have another all-time favorite, NVDA. Which I'm going to go ahead and start with you, Christian, but I've got some fascinating things to kind of add. But I'm going out to, Christian, can you do me a favor? When you're done and when you show your the daily chart, what you do, flip it and go to the monthly.
Sure, absolutely. Yeah, that's, you know, and it's a great point. Like, you know, starting a little bit further out
or even the weekly 20-year, I think you should.
Yeah, I'll show the weekly. So,
yeah, that's the one.
But starting further out and then drawing in is a very good, you know, it's something that is a great practice to do. And I know I've just been showing the daily chart, but you know, especially at the end of the week, you know, Saturdays and Sundays, great for looking at weekly charts and taking a step back and then drawing in closer. So, you know, here's what we got for the weekly chart. Obviously, we got a developing bar here, but we got a new all-time high in NVIDIA. So I'll draw in a little bit closer, but yeah, I mean, you know, this has been a beautiful stock over the last couple of years. The daily chart, I think it's a little bit funny because I think there's a lot of people who were on the fence of like and I think this was on sorry to quote CNBC and probably do a bad job of it, but I think somebody was saying before they reported earnings that this could be the place where NVIDIA breaks down. And there was some, I think, bearish talk going into their quarter, and lo and behold, they had earnings, and the numbers weren't, I think, as impressive as what they put out previously. I think they wrote down all the crypto, revenues off of crypto mining, and they said, hey, we're concentrating on basically more Internet of Things, and they're talking about their new generation chip, which is supposed to be spectacular, from what I understand. So right when this thing looks like it's going to break down, a couple red bars, and the buyers come right back into this thing. So it's a very amazing stock. It always seems to have doubters in it. I've seen that in the past where a couple brokers have downgraded the stock. It spends some time, but has never really broken the 200-day moving average. So right now, I think it's been on fire this week. I think it's a little bit overbought. And at this point, I still like the stock. I think it's a great trending stock. And I think once it comes back down to earth a little bit is probably where you want to get involved in the name if you're not in it. But I think that coming back, if you get all the way into the 50-day moving average, that would be perfect. But even back to the 20-day moving average, I think would set up a good entry point at this place. But at this point, I should say, sorry, it's been a long day. But yeah, I mean, it seems like this stock always has a bunch of, people who are looking for, just, can't believe that this thing is continue to go higher. I just err on the side of the trend. I'm a trend trader and would look for, a move back into support before I would initiate a new position.
Do you care to share where you think support is?
Yeah, I mean, I think coming back into one of the moving averages, I think that's respected the 50-day moving average. The 200-day moving average, we just haven't gotten a move down there. I think this is as close as we got. Was back right after earnings, which ended up being a good buying opportunity. What did this thing go from 241 to 270? Like a rocket ship, along with AMD.
Yeah. Okay, very well stated. Jim.
Yeah, obviously, like you guys are saying, big company, big earnings. I mean, big jump in the stock. But the only thing, I was looking at the volume, and it does seem to be drying up a little bit. The 50-day volume, 10 million shares a day. 200-day volume, 13.5 million shares. So, I'm wondering a little bit out loud is, everyone got short that thing or out during that bad, or shall we say not bad, but sober report where they weren't too excited about the earnings report. And so they brought it down to 240 and then caught everybody either short or out. And then bam, they brought it back up to 280. And I'm wondering if the 280 was short covering and people just reversing themselves after they started shorting it after the earnings. And maybe in the short run, maybe that 280 is not going to get taken out. And maybe we are going to go a little bit into the difference between the 200-day, which is 235, and where we are now. And so if I own this company, I would probably be looking at selling calls or doing some married puts to either put brackets around my equity or to bring some cash flow into something that may, at least temporarily, may have run out of a little bit of gas.
Right. I like the married put idea that you have provided, because I believe that volatility is pretty low right now. Which is something I'm going to bring up once we take a little break, and that might be right after we do IWM. And that I think vol across the board is holding steady. I think the VIX is sitting around 12, but then the futures sitting like at 14, and it was very well bid at 14 today. And I found that very interesting, because normally when we're in a strong rally, which we have been now, since we've seen all the indexes go to new all-time highs except the Dow, but the Dow will get there. I was stunned that volatility wasn't down at 11 or even sub. And I don't know if it's because the people are afraid of what has happened in the past and in January and getting caught again. I don't know. But when it comes to NVIDIA, I think that NVIDIA is a solid company. I think it's an important company. And again, I'm from the Bay Area. I live in San Francisco. So we get all of this talk that comes right along with it pretty much for breakfast. And I think that it has become one of the stronger firms down in Silicon Valley. And that has given it a lot of support, but it also has added a lot of volatility to the price and how it can move around. And I think that occurs anytime you start getting a stock that starts to move over $150 and it's over $200, and this one's not pressing to go over $300. It's going to increase the volatility. It's going to add tremendous amount of pressure on NVIDIA itself to either come up with new product or to make sure that what they're doing is successful, because the last thing you're going to want to do is disappoint the market, as we have seen from other high stakes players, and then the thing just kind of falls apart. Near term, I think that NVIDIA is very overbought. And I'm going out on a daily, and I could swing out to the weekly chart, and I think the weekly was even showing a little bit stronger. Now, not quite as strong as the daily. So there still may be upside room before this stock really decides to turn over or roll over and at least do some kind of a correction. Now, I'm going to give credit to Jim Kenney because he has pointed out more times than not that 200-day moving average and the percentage that the stock price sits above that 200-day moving average. If I go out to the weekly chart in NVIDIA on my Thinkorswim, that 200-day comes in at 103. Stock is trading at 275. I'm going to ask Jim, what would you say about that one, Jim?
It seems like there's a lot of real estate between the average and the price. Some stocks, it is irrelevant how far the distance is. This could be one of them, but on a probability basis, and if you have to make a guess on it, you have to factor in that the probabilities are not favorable when it's that kind of distance between. But like I say, to short it or just to buy puts would be an absolute gamble because the momentum is all to the upside. But if you were an owner of it and you had those type of gains in it, investigating some hedging techniques up here is certainly not ridiculous.
Agreed, 100% agreed. And I like the ad that if you already are an owner of the stock, so you're long the stock, and you're sitting on a nice little chunk of change in terms of what your profit may or may not be, you're going to want to start to look at ways that you can put it into the bank in terms of you get some puts on there, or there's other strategies that you can use, but you better start protecting if indeed that your position is that you don't want to sell the stock yet. So I agree with you on that. NVIDIA may continue because, again, it's a large player in the NASDAQ. And so it could continue just to follow along with the NASDAQ. NVIDIA tends to kind of move right along with Netflix. I'm not sure why, other than they both start with an N. But I found that one goes, the other goes, and then when they turn, they both kind of turn in the same direction. But I think the stock could pull back to probably 265 and still be very, very healthy. As long as it stays above what I use, the 9-day moving average on the shorter term, which is like daily down to the 5-minute chart, I would think that it's just a pullback and that this stock will go above 280 and likely 290 before all is said and done. And then I think we roll over and then we start to come down and we will meet the 200-day moving average likely on the way down versus finding support there. I think it'll just kiss it and say we're going on as it continues to move. But short term, I think there's still some upside possibilities within NVIDIA. Let's take a look at IWM, which for those who don't know, and I know that the three of us on the panel, we know, IWM is the Russell 2000 ETF, and it's from iShares. And it has options that trade on this, and the options trade extremely well. It is a big, big product for the Russell. And I'm going to go over back and start with Christian on this one.
Yes, IWM, small caps. So real nice move. You can see I've got a trend line drawn in here along with the moving averages and so forth that I've got on the charts. I think this has been a great area to be in where when there's been the headlines for trade tariffs, there's been, I think a lot of money has kind of went into the small caps because, in theory, there's a little bit of protection there. Most of these businesses, small caps, in theory, have more business inside the United States versus international. There's also been a lot of good economics that have come out. There's been a lot of key growth that's been continuing to run and to chug higher in the U.S. So that's really good for small cap companies. So we do have this breakout, real nice breakout here of this pattern. I was actually playing, which I know we're talking about IWM. I just exited my IWN trade, which also was very coiled, which is small cap value. So I actually just exited that today. So it kind of, tells you my feeling right now is I'm taking a little bit of profits. I would wait at this point. I think we're a little bit extended. We're still honoring. It's why I have this yellow line on my chart, which is the 5-period exponential moving average. And very similar, I heard the 8-day moving average, which is basically just the same. Really a nice indication of trend that you can use. So once I see really price, so I'm kind of getting ahead of myself, taking some profits. But really, once we duck under, is kind of the area where I say, okay, get out of the remaining of your trade if you've been kind of cutting your trade as you go along. But I'm just kind of anticipating. There was some decent puts that were bought in the indices today as well. So if we come back and we retest this breakout zone, you could either, I've got the dotted line drawn here, but even I would say I've got the top of value, which I see as 169. I think that would be a place to kind of revisit. But right now I'm in, taking profits zone, and we'll look for a nice pullback to kind of redeploy some cash. And again, love the small caps. I mean, the other side of it is too, if they start to get things done. We got the Mexico deal was done yesterday. I think they're trying to get Canada done next, it sounds. And then, hopefully we get a deal for China, but it sounds like that one's going to be a little bit, may take a little bit more time. But if that happens, you could expect some other things besides small caps to rally. And maybe that's where you get that rotation out of small caps and into a little bit of your bigger multinationals and industrials and large caps.
Question to you, which kind of just leads, and Jim, it'll be the same. It leads into kind of what I thought we could kind of pull together on a little bit of a break that we're going to take in about a minute here from these stocks and just kind of toss some other things. Today, we saw the Russell 2000 all-time new high. We saw the S&P all-time new high. We saw the NASDAQ all-time new high. How much does that influence? Again, now let's go back to IWM. You talked about it's like, hey, we got a 172.94 today, new all-time high for this ETF. How much does that play into what you want to do, or you're thinking of making the decision, gee, might be time to get out, or just take profit? Yeah,
I mean, I'll start if that's okay.
Yes.
But yeah, I mean, really, that's a great question, and something that I've been talking about. And I'm just I guess I could bring up the for whatever reason I just brought up S&P futures because here back in January, just because we make a 52-week high, and I see traders do this a lot, right? As soon as we coming out of a consolidation period, which you could have said back here, right? Of course, I've got my hindsight 2020 glasses on, but it's so funny because I hear this a lot sometimes. Once we come out of like a boring area of a couple week consolidation and we start to rip to the upside, I always see a lot of traders say, "Okay, well, I'm buying puts," and to me, that's it's something that I've kind of learned over time. Let the trend go, and make sure that you're managing your risk because no one knows how high we go. Everybody's got their crystal ball and they're trying to figure out how high we're going to go. But if you would have gotten out on that first or second bar back in January, of course we saw what happened after that. But if you were riding your trades and you got out just because we saw a couple green bars and you're like, oh geez, that's too much. We're out to 52-week highs. That's not supposed to happen. And then we ripped another, another 100 points from there. So, the important thing is management in this sense, and to kind of stick with it, and peel some of those trades off and ratchet up your trailing stops. But if you go back to IWM, or if you go back to whatever, I think it's very important to take targets and to take some money off the table. Yeah. But at the same time, you want to have a little skin in the game, because no one knows how much further we're going to go higher. And I hope we go a little bit higher. I hope we don't get a top like we had back in the beginning of January, and I hope we kind of back and fill a little bit. But we talked a little bit about being overbought. I think we're overbought on the 1 hour charts. If we look at this in terms of the 1 hour, we were overbought yesterday. We actually burned off that overbought level on the 1 hour. So I don't think that we're that overbought. I think we're at a 69 RSI. So that's why I have the RSI on my charts, is, it really kind of gives me a little bit of a sense of how heated we're getting. So we're right on the cusp of being pretty overbought, but I don't see us in dangerous levels yet. A 69 RSI, I think, we've seen it before where, we get to, in the 70s RSI. So it's kind of a dangerous point. You could see IWM the last time when we got overbought, it was a good place to take that money off the table and then maybe wait for that red bar and then say, okay, I'm out. But we're just never going to be able to pick that candle that's going to be the absolute high. And I've learned over the years, don't play that game. Manage the trade, but let it run. Yeah.
Speaking of RSI, and then Jim, you would go right on to you. But Christian, you use an RSI. We're seeing the RSI sitting at, what did you say, 69? Is that what you said, 61? Yeah. And here we have an index moving to new highs. I happen to be a big volume watcher. When I see them coming up and pushing these stocks and these indexes, particularly the indexes, to new highs, and not just barely to new highs, they're moving them, substantially above on these new highs on no volume. So could RSI be telling us that the relative strength is not there? And Christian, that one was back to you.
Yeah, I mean, I don't see it that way. I think the breadth is very strong. I do. I see us every couple of days. There's a new group that comes out. I think on Friday it was software. Yesterday it was a different group. So I mean, I think this is. I think. I'm not going to fight the trend. I understand. I mean, it's low volume, but it doesn't mean that you have to give back the profits because it's low volume. I mean, I would expect low volume all this week, right? I mean, it is a week where there's a lot of people that go on vacation. Right. It doesn't mean I'm going to give back the profits because it's low volume. I really think, for volume purposes, I mean, I know from when I used to trade in my institutional days, we normally don't see high volume on breakouts. And it kind of goes back to how institutions accumulate shares, right? They do it a little bit at a time. When you see big volume, that's your turn to the downside. So that's when you get out, when you see big volume. Okay. Because that'll be on, you see big volume on turns. That's when institutions are unloading. But when they accumulate, they do it in little bits and pieces. They're price sensitive. Really, when they're exiting, that's when you will see, get me out and get me out now. And that's usually when we
force their hand on a couple of products that I know. Just in terms of force them to kind of, you better start bailing, guys. Anyway, another conversation. Jim.
Yeah, I think the Russells was one of the great indicators that we were going to have another leg to the upside, because it started making new highs in May. And they are one of the prime beneficiaries of the tax reform. So they kind of gave us the indication in May that they were breaking out and the board was going to go higher ultimately, and that's exactly what's happened. you know, you can't badmouth things that keep making new highs, so you don't do that. And it is not that tremendously overbought from its moving averages. The Russell moving average is 1595, and we're up at 1728. It's certainly extended a bit, but nothing, egregious. The big thing is are we seeing a situation where there's been a run up to new highs, and if the relative strength isn't making a new high, you have what they call a divergence. And sometimes, not always, sometimes a new high that's met with a lower RSI and it has a divergence rolls over, and it rolls over a bit on the fast side. And it's not out of the question that that could happen if, in fact, some of the news becomes more sobering, like the Q3 numbers, which are going to be possibly nowhat near what the Q2 numbers were.
Right.
And investors are going to have to get their arms wrapped around the idea that the economy doesn't have the same GDP every single quarter. But
right.
like I say, this is a great index. Been doing a great job. It's been certainly breaking out and going very well ever since May, and today still held on to most of its gains while other things reversed.
Right.
But like I say, and again, in the long run, let's never forget we've got $1 trillion of buybacks that they've signed up for. We've got a tax cut that hasn't probably worked its way fully through the system. You got interest rates where it's an absolute joke in the bank. And people are not going to be real excited about blowing all these stocks out that they're making 20, 30, 40% on, whatever they're making, to jump into that 1-2% money market. I mean, the rates are ridiculous, and they are not in competition with the stocks. Having said that, the market does go through ebbs and flows. And if you make a big new high like you did in January here, and if the volume isn't that great and the RSI is not that great, and the Q3 numbers kind of take the bloom off the rose, Best Buy is a good example that they're not looking for Q3 to be that great. Then you could get the sharp pullback. And with the VIX, VIX is not is not any kind of a high price here. In the 12s, the thing normally averages about 18.
Right.
And so the bottom line is the VIX is in a relatively low area, not extremely low like 10, 11, but it's certainly in a lower area. And so if the news were to change a little bit, again, with the volume that it had on the upside, could some people do some profit taking as we go into September and stuff like that? It's possible. And but again, the big picture is all that money on the sideline, all that money for the buybacks, all that tax revenue that's going to be going into the company's pockets, and the consumer is still pretty much on fire. Although I'm looking at the XRT and some of the stocks that have had big runs, like your Walmart and your Macy's and your Targets and your Nordstroms and the rest of them, and that might be an opportunity to look for a sell, only because they are about as popular as the banks were in January. And we saw that when the banks got that popular in January, they didn't exactly pan out very well in the subsequent months. Right. Since the whole world is long retail now and thinks that these retailers will not stop, I see some of the stocks have stopped. And so I think in the next couple of weeks here, if you don't make new highs on some of these retailers, there could be an opportunity for selling there.
Very well stated. Thank you very much. IWM, I think, still does have some upside left to it. And one of my main tools that I use is Elliott Wave. And I still, I'm looking at a monthly. And I think there's still additional upside left. And that's coming off of the low that we saw in January. End of January, beginning of February, where we got that low. And 1, 2, 3, 4. Not a whole lot, but I still think that we've still got some left, at least on basis of the IWM. And I'm sure if I looked at the Russell, it would be pretty much the same thing. And once it's done, though, I mean, again, I can't pinpoint to say this is what's going to cause a turn. This is what's going to help it accelerate. I just think that when I take a look at the VIX is now being called, as we all know, the fear index. And we all know what can happen when we see extreme complacency in the market. And whether that's on an institutional basis or a retail level, I don't care. When things get too complacent because it's like, oh, it's not going to go down, nothing's going to happen, and on we go, that's usually when something will get tossed in there and it'll just force everyone to react, and then we get that overreaction. So I don't know necessarily if we're really kind of going into that same type of a situation, considering that they do blame that big downturn that we had in January on somebody with fat fingers coming in the VIX and really making a huge error. I don't know the validity of that or not, but I do see volatility moving higher, and that just tells me at the same tone whether prices really start to pull back or not, volatility can still move up as people start to balance out what they're doing. What I don't see is what we saw previously, is that institutions would come in, and as they were loading up on stock or loading up on an index, they were selling vol. I don't see that so much anymore, although open interest in the VIX options is gigantic, but I think it's evenly distributed along that whole curve. Guys, we got 2 minutes. That went by very, very quickly.
Hey, guys, do you want to do a quick one from the audience before we?
Yes, please.
All right. How about PGTI?
PGTI. Prestige Graphics Inc. Okay. Guys, I'll go first round on that one. Even let me pull it down to a daily. Prestige Graphics Inc. I'm waiting for my data.
I think you got PGTI.
TI?
Yeah, TI.
Peter, Gary, Thomas, India.
Yeah.
Yeah.
PGT
Innovation. You know what? The price is a lot different. The first one was trading below 1/10 of a cent. Okay, PGT Innovations Inc. Like so many other stocks, looks to be sitting up at the top. Yeah, it made all-time new highs at 25.95. And hold on, guys. Sorry about that. That was Washington, D.C. calling. Interesting. I think this is very interesting. My momentum indicators suggest that the market is not rising on such a high momentum as it has in the past, which tells me that there's still room on the upside. And I would say that, if I'm looking correctly, I'm going to say 28 to 30 is not out of the realm of possibilities here. 1, 2, 3. But you may have a lot of hurdles to clear on the way. Stock is not so overbought. The volume seems to be pretty good, but I'm going to let Jim comment on that when he comes around. And yeah, I don't see anything too negative about this stock, other than, you know, it's on a parabolic rise off of the 2015 lows. So, Christian.
Yes. So I had to look to see what this company does, because I'm not that familiar.
No,
I'm not familiar with it.
I didn't have time to go look.
So it is a home improvement company. It produces building products. Company offers windows.
Okay.
Doors.
Sorry. Go ahead.
Yes. Windows, doors, and other related products. So yeah, I mean, you're absolutely right. It looks like it's got a lot of strength to it. It had a nice earnings gap up, and then it's been running a bit since. So I would say, if you're considering I've never traded this company before, the chart is very strong. If you're long, I would stick with it. And we'll see how it reacts with that. You could see this blue line. The prices come in and met the 20-day moving average. So we'll see how it behaves around there. If it happens to lose that, maybe watch for this earnings gap to be honored. And maybe I've got the top of value, which is 23.66. But yeah, it looks. I agree with you. It's very strong. I don't have any reason to get away from it, but yeah, it's pretty good. And by the way, great conversation. The last question I thought was really good on IWM, and and thought everybody's value everybody's point of view, because it's difficult to figure out, you know, what we're going to do from this point on.
Yeah.
And it's certainly been an interesting market the last week.
Oh, yes. If you're trading this market, it's not been that interesting, because I have to tell you, as a futures trader, you just sit and go like, okay, the paint has to dry before they're going to decide that we get to make money or we're going to get stopped out. I digress, and I'm going to go over to Jim.
Yeah, right now, obviously, you had a big move in it. Some of the numbers coming out of the housing industry has not exactly been fantastic lately. I don't know if that's something to be concerned about. If you own it, obviously, it's great to own. If you don't own it, pull back towards 22 where there's a gap and a couple of highs there. Might not be a bad location to get in. And then, of course, if it breaks above 26, you're off to the races, because that would be new highs for the year. So I would say above 26, it would be giving an indication it might be going up on its next leg. And then 24 would be the support. So if it breaks above 26, 24 is your support. And if it goes down, the 22 has a couple of high points there, plus a little bit of a gap. So those are the two key points as far as I can see, 24, 22 on the downside. And then obviously, you wouldn't want to buy it here unless it's going to break 26. Unless you're a penny scalper, of which I'm not.
Well, futures, thank God, don't trade in pennies. Guys, that's going to wrap it up, but I'm going to go back and Christian, just kind of review for us how people can get a hold of you, and your web address or your email, or however people can get in touch with you.
Certainly. I'm at TribecaTradeGroup.com, and sure, you basically go to our website. Like I said earlier, we run an all-day trading room. We also do things like on the weekend, like provide a newsletter with some trade ideas in it. We've got a private Twitter feed and all with all the bells and whistles and all that stuff. But I can be found at TribecaTradeGroup.com. Thanks again. I love being a part of the panel, and it's really fun to go over some charts and to listen to some different opinions on the overall market as well as individual names. So again, pleasure to be on, and thanks very much.
You're very welcome, and it was a pleasure having you on today. Jim.
Yeah, people can reach me at optionprofessor@gmail.com. Just shoot an email over. I have a weekly podcast, weekly market update podcast that you can get the link for, so you can keep up to speed. Hopefully, you guys have figured out a little bit that I follow many different markets and many different angles of the market. So if you have questions on the markets or positions you have or anything else like that, again, optionprofessor@gmail.com, and I'll respond, and hopefully I can give you a hand with something.
Very good. And I'm going to give you a little bit of tooting your own horn there. Jim is the person to go to. I have to say, I've done many shows with him here and also on David's other show, and I have great respect for what Jim Kenney has to say. And it's always backed up with some very good information. So thank you, Jim. And it's always a great ad when you're on and I'm on, because I know you'll fill in a lot of blanks that I forget.
Thank you, Michael.
You're very welcome. Again, I'm Michael Filighera. I'm with LogicalSignals.com. If you want to get a hold of me, please do, because I've got a lot of ideas that I'm going to start to be putting into play, and so I'll be wanting to get other people's feedback on that. But you can reach me at Michael@LogicalSignals.com or Michael@MJF1Partners.com, and it's the number one, not the word. And on that, I'm going to thank Christian Fromhertz, and I'm going to thank Jim Kenney for being with me today. And thank you guys for filling in while I had a little bit of technical difficulty in the beginning. And David, I'm going to turn it back over to you. And thank you again for asking me to moderate, because it's always a great deal of fun.
Yeah, it was a great show. Thanks, everyone. Just a reminder, please be sure to subscribe to Timing Research on YouTube and your favorite podcasts, podcast network. You can also go to TimingResearch.com to get access to any of the past show archives there. Next week, the Crowd Forecast News Monday show will be off for the market holiday, but the 48th episode of this show will be on Tuesday, September 4th at 4:30 p.m. Eastern Time. Of course, you can always go to TimingResearch.com/live to view the live broadcasts. And just want to thank all my guests again for this week. Michael Filighera of logicalsignals.com, Christian Fromhertz of TribecaTradeGroup.com, and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thank you.